Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm going into the final part of my series about European ETFs that invest their money towards the USA. And in this final part I will talk about ETFs that deliver a higher dividend than the previous ETFs that I mentioned in the series. So if you watched the previous parts of this series, you know that I talked about 5 ETFs that invest their money into the S&P 500. One of them is returning in this video, the XYLF. Then I talked about 6 ETFs that deliver a quality dividend. So either the companies are growing their dividend or are paying out nice dividends with a good payout ratio or are already paying out a lot of years growing dividends. And in that regard, I should say, of course, the dividend aristocrats play a big part there. And then we have the third part where I named 3 ETFs that invest toward the Nasdaq 100 and 1 ETF that invested according to the rules of the Islamic religion. So if you are an Islamic person and you want to check out which ETF it was, check out that video after you completed watching this video. And in this video, I will name 4 new ETFs and 2 I already mentioned. So the XYLF already said, and for the Nasdaq 100, we had the QYLD one that I already mentioned. And here are the things you should know for the things concerning the next slides that I'm going to mention in this video. So I can start with the first one, and it's the QYLD. So I can go over this one quite fast because it's the covered call ETF from Global X that I already mentioned in the previous video. And the most important thing is that it is really focused about cash flow. So the dividend yield is 11.75%, and in the past year it went up 12.90% as well. So yeah, the biggest part of the performance lays in the distributions that it makes, and the distributions are also monthly, so that's also a nice thing for dividend investors. These are the distributions. You can pause the video if you want to check them out individually, but I'm going to go to the next one, and that's XYLF, the other Global X covered call, and this one is then towards the S&P 500. And yeah, the performance here is a little bit less than the QYLD one, so a dividend yield of almost 8%, and it's an estimate because, yeah, as I mentioned in the first video of this series, we still need to go 3 distributions this year in order to have a complete year of distributions for this ETF, and then we will be sure how the dividend yield will be over the past year. But for now, I made an estimate that it's going to be a little bit less than 8%. And then the first ETF that I need to mention in this video. So it's one from WisdomTree, and it's the WisdomTree US Equity Income UCITS ETF with a total expense ratio of 0.29%. So the WisdomTree one from the second part, where we had the DGRW, and that's the dividend growth ETF from WisdomTree, and it performed there the best. Here it's just the same, so WisdomTree has actually the best performing high dividend yield distributing ETF, because QYLD and XYLF actually they distribute the premiums of the covered calls that they sell towards the stock that they own. So in this regard, this one is a real dividend ETF, not a dividend ETF that also delivers premiums. So the WisdomTree once again wins it in the dividend realm. There are 351 holdings in this ETF and only 28 million invested into this one. It has a 5-year performance of 33.91%. So in this regard, you can already see that having a higher dividend yield isn't that great for the performance. At least the past 5-10 years, that has been the case, that ETFs with a focus on dividend yield aren't really performing that great. But the WisdomTree dividend growth one and the FUSD, so the GGRW and the FUSD, in that regard are more or less an exception, and the European ETFs make an exception on that one as well. But most of the time, when you go for dividend yield, the performance lags a bit, certainly in the past 10 years. Before those 10 years, so the past decade, I think it wasn't that big of a difference, but yeah, the technology run of the past decades definitely plays a role there, with the technology companies not paying out dividends. Yeah, it's all things that you need to keep in the back of your mind when you're analyzing numbers. So for dividends being paid out, once again, WisdomTree in months where not a lot of ETFs are paying out dividends, so January, April, July, and October, and a dividend yield of 3.40%. So not that high, I know, but it's higher than the ones that I mentioned before. So I include this one here. And yeah, nice distribution over the years as well. So in the quarters, so quite nice ETF. Only the performance, of course, when you look at the other ones in the series, are not that great. And if the QYLD and the XYLF would have been beaten by DHS, I don't know yet, because yeah, the one from Global X aren't around that long already here in Europe, so I can't say it for sure. Then we have the HDLV one from Invesco, and that's the high dividend, low volatility. So Invesco always have those kind of ETFs for all the things that they do. So for Europe, they also had a high dividend, low volatility one. They also have a global ETF with a high dividend, low volatility name in it. So I was looking for it and I found it for sure. The total expense ratio is 0.30%. It's noted in US dollar on the SIX stock exchange, and there are 50 holdings in this ETF and 268 million invested into it. The 1-year performance, it's a bit better than the WisdomTree one, but the 5-year performance then is lagging behind with only 20.38%. And 4 dividends per year, so quarterly, and yeah, in the most months where most of the ETFs pay out, so March, June, September, and December, and a dividend yield of a little bit higher than 4%. And yeah, here in March of this year, the dividend went down a bit. I don't know why, but it was a bit surprising. So all the rest are pretty much equal, but then the distribution that happened in March was a bit lower. So hopefully in June it will be a bit higher than for the holders of this ETF, but we need to wait and see there. Then we have VRPS, and yeah, here comes the first one with preferred shares. So far, I didn't had preferred shares yet in all the videos that I made for this for my YouTube channel. So it's the first time that I mentioned those. So preferred shares, most of the time, they get more votes in the general assembly of the company, and sometimes they also have advantages that they get paid out a higher dividend. And yeah, in Belgium, I used to buy the VVPR shares. They got cancelled, later on. But when you owned the VVPR shares, it wasn't actually preferred shares, but you had then a preferred tax advantage in Belgium. So instead of 25% of withholding tax, you only needed to pay 15% withholding tax, and they canceled those shares because they were really cheap. They only costed 1 cent or even less than 1 cent because nobody was really interested in them. But I was, because paying 10% less withholding tax is always important. And it was a really pity that they canceled those shares. And then at the same time, in Belgium, they also increased the withholding tax from 25 to 30%. So it was even more annoying. Certainly, as a small investor, as I was when I was younger, from my 14 years on, till uh, they canceled those shares. I always I always liked it when those small shares that I bought gave me actually a huge discount in taxes that I needed to pay. But with that being said, I'm going to return to the VRPS one with the preferred shares. So as a lot of people are not really interested in buying preferred shares and just buy the normal shares that are more readily available for being traded on the stock market, you see it in the performance. So the performance of the preferred shares are rather low. This one is an exception for the past year with 10.69% up. But with the ETF that is coming, you will see that there the 1 year performance is much lower. So I'm not a big fan of ETFs with preferred shares, but I'm mentioning them either way. I think you, as my viewers, you need to know that this one is around, and that I'm not a fan of it. But you need to make up your own mind, because it's not financial advice. It's just the things that I see and that I think are worth to being mentioned. So in that regard, I should say they also pay quarterly, also in the most common months, and they all almost pay out 5% in dividend yield. So that's quite nice, and the distribution over the quarters is also really good. Then we have the PRFD one, and it's the Invesco Preferred Shares UCITS ETF. So yeah, it's the last one of today that I mentioned, and in this one, if you look at the performance of 1 year, it's 2.74%, and the past 3 years and 5 years, the performance was even negative. So really bad, and yeah, I'm mentioning it, but please don't buy this ETF. Also in the same months as the previous one, also from Invesco, the dividend yield 5.30%, and also quite nice distributed over the quarters. So in that regard, it's a quite nice ETF. But if you look at the performance, yeah, you don't want to show that to your relatives that you are investing already for 5 years on the stock market. The stock market went up in most cases, and you have a return of minus 0.86% just because you thought that preferred shares were a good thing. And if you look at the final overview for this last video of European ETFs that invest their money into the USA, you see that actually from the higher yielding ETFs, the QYLD and the XYLF seem to perform better than DHS and the HDLV ETFs, but we don't know for sure yet because 3 years and 5 years are still a long way to go for QYLD and XYLF, as the two covered call ETFs only recently started on the SIX stock exchange and in Europe. I could actually go and see what the QYLD and the XYLF did in the past 5 years in America, but yeah, it's not quite the same because there the total expense ratio is higher in America than here in Europe. So I don't know whether or not it's then truly going to be the same. And yeah, the PRFD, I warn you about that it's a possible trap there to invest in the preferred shares. And the VRPS one, I'm not a fan there as well. But there at least the 5-year performance, it's almost 18%, so not negative like the PRFD one. And with that being said, I thank you for watching this video. I hope you go and watch the other 3 videos of this series as well. And you can of course subscribe to my YouTube channel and go and watch my other videos as well. Hit that like button on my other videos as well if you like. It would help out the YouTube channel a lot. And with that being said, thank you for watching this one and see you in the next video on my YouTube channel. Bye.